So hi madam, my name is Divya Shaini. So today me and my group mate Evie going to present about our report. So based on the two articles, which was the chosen title for us is we choose the impact of GST implementation on the Malaysian stock market index volatility. So moving to the introduction, the title of the chosen article is the impact of GST implementation on Malaysian stock market index volatility, which has been written by Razaleigh Harom IIUM. So the main purpose of this journal is to examine the impact of the goods and also the service tax GST implementation on Malaysian stock market index, and also the main aim to investigate on this article is their aim to investigate on how the market would be react to the stock, and also the concern triggered by the two phase of this tax reform, that is announcement phase and the implementation phase. Moreover, we study the volatility Malaysia stock market index, which is the post-announcement GST and also pre-announcement GST. So the second result shows that the lagged return of the KLCI and also the KLCI futures are similarly significant to determine the changes in the stock return and also the net benefit of investing in the Malaysian stock market index as well. Okay, let's move on to the second slide, which is the problem. So despite the advantages is identified, based on the GST stock market announcement from the article, we can see the problem was triggered amidst worries, concern, and also uncertainty to the public, which is the government has been delaying its implementation in several times since it's the first introduction in the Malaysian budget 2005. So according to that, the strong possibility of being the regressive that is exacting bigger proportion of the earnings of the lower incomes comparative to the higher incomes through their taxes, possibility of the taxes rate increase over time, and also the possible misuse of the revenue by irresponsible government due to the corruption as well. Besides that, anticipating price rise, the household will seems to hurriedly purchase basic necessities and also it be durable items like passengers cars, furnitures, and electrical appliances before the implementation of the NC. So in this case, we are understanding that the effect of macro news on the security prices is essential for the better understand of the market behavior as well. So moving to the GST, another problem we can conclude that this kind of a shock are unsatisfied and also evidence to have a significant impact on the market volatility as documented in the past literature success. So in this case, we are realizing that the signification of a new important event gap, it could be caused in the literature of emerging market like Malaysia. So this is motivated to investigate the impact of the GST announcement and implementation on Malaysia stock index and provide evidence by the first examination of pre and post GST announcement in Malaysia stock market. So moving to the third slide, which is the review of literature. So what is the review of literature? We can state here is the tax policy is one of the theoretical concepts that links a macroeconomic volatility with the stock index return are explained by the average pricing theory, which is called as APT, and could be further understood by two dominant hypotheses, namely the tax effect, the proxy effect hypothesis. So this APT takes into 19 Malaysian stock market index volatility account in the influence of economic factors on the stock market's index return as well. So what is APT remains? So basically APT remains valid is a risky asset pricing tool despite the argument on the number of factors needing to be constant before linearity of the relationship holds. Besides that, this is also supported in the study of for the Huda in article as well. APT basically supports the view of the macroeconomy as a potential impact on the asset return. Therefore, the relationship between the macroeconomics news announcement and Malaysian stock market volatility index also be explained by the tax effect hypothesis of Feldstein and also profit effect pharma. So similarly, in the impact of macro news announcement on the stock market volatility, has caught the attention of researchers and also the policymakers over the years. So the literature witnessed the development of this related study be segmented into issues, relationship between macroeconomics announcement and market volatility, and the methodologies employed in examining the relationship as well. As a result, detects different reaction of the stocks towards the shocks. For example, the reaction of the financial stock is the strongest among all, followed by the IT stocks and also the response of the utility stock at least. So as a signification move in price was supported when the surprise is related to the expectation of the markets. So from these findings, it's supported by behavior of the Malaysian household prior the implementation of GST. As we can see, a support the record of increase in the sales of certain goods was reported prior to the announcement of GST, while sluggish in the sales was later documented upon the implementation of the GST. So now I'm passing to my friend for the further. Thank you.
Hello, my name is Evi Sharina. So I will continue to present the article 2 about GST. So I will continue about design procedures, data analysis and presentation, and the conclusion. So for the design and procedures, so the research methodology was used as period range from 1 June 2009 until 15 November 2016. It's obtained CPI, PPI, and UNEMPR data from the Department of Statistics, Malaysia. So, is it a replica study or original study? So, actually, this is a past study on Malaysian stock market index volatility focused on the impact of Asian and global financial crisis. So, and then they do the studies for the GST on Malaysian stock market index. And then the procedure structure is price series are grouped into 4 different categories to provide more in-depth report on the impact of GST on Malaysian stock market index volatility. Sample performed is by proceed with CARP model that examines the impact of GST on the volatility of the Malaysian stock market index. Okay, for the data analysis is when they do within the pre-GST announcement, the conditional mean shows that on the average mean of Malaysian stock market index KLCI is determined by lack of its own return, current return of futures price, and lagged returns of the future returns, keeping PPI, CPI, and UNEMPR constant. This implies that the performance of the market returns and its futures returns in the Malaysian stock markets index. The average lag return of the KLCI is negative and statistically significant. During the post-GST announcement, the report on the conditional mean of the CARP model in the post-GST announcement is similar but differs in magnitude. There is a need to point out some noticeable differences in the first moment return of the post-GST announcement. Negative lag return of the KLCI is absolutely lower, and the lag return of KLCI have reduced after the GST has been announced and implemented. This indicates future markets consistently maintaining its roles of price risk exposures, and risk reduction is proportional. And then, during the GST announcement, the average lag return of the Malaysian stock market index remains negative but insignificant, while the average lag return of the KLCIF remains positive and significantly for the model. This indicates that the announcement of GST has significant effects on the Malaysian stock index lag return. Okay, after the GST implementations, in the conditional mean of the GST implementation, average lag returns of Malaysian stock markets index and own futures returns are positively significant, while lag returns of its futures is negatively significant. This implies that both the KLCI and KLCIF F, returns are significantly important in determining the validity of Malaysian stock markets index, but in different magnitude and directions. So, and then for the conclusions, in conclusions, the volatility of the Malaysian stock markets index prior to the GST announcement is lower compared with the volatility of the market during the GST announcement and GST implementations. This finding further agrees with the expectation of the market's participants and the previous studies on the impact of macro news on stock market index. They found that the imposition of GST increases price of the goods and services and reducing purchasing powers of household. Such increase in the volatility of Malaysian stock market index is consistent with the expectations of the market. So that's all from our parts of article 2. So thank you to all that watching about our video. Thank you. Bye.